In this month's Economic Update, Kaplan Professional Education's Michael Pollock speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional's monthly economic update. I'm Michael Pollock, and this month we're speaking with fellow at the University of New South Wales Business School and host of The Airport Economist, Tim Harcourt. Thanks for joining us today, Tim.
Good to be with you, Michael.
Let's firstly take a look at the US. To what extent do you expect the isolationist policies of the Trump administration to trigger an outbreak of global protectionism?
Well, there's certainly signs that it is. The DHL export barometer said that over a third of Australian exporters thought Trump was disrupting the trading system, and a quarter of them were concerned about withdrawal from the Trans-Pacific Partnership. So I think there are real issues now, business-wise, in terms of the Trump disruption effect on trade.
How do you see the brinkmanship between the US and North Korea ultimately playing out?
It's very difficult, North Korea, in the sense that you can normally threaten another nation with economic sanctions. Well, North Korea is already very poor, and they starve their people and spend all their money on armaments. So those normal economic incentives probably don't work in the same way. It'll be a matter, I think, of how far North Korea's going to push it, and the role that China plays, in the sense that China is still officially an ally of North Korea, and it's probably not in China's best interest for North Korea to be playing up. I think it's helpful for China that North Korea is a rogue state that they've got leverage over, but they don't want them, going too far.
Turning to China, how problematic do you see the flow of credit to the inefficient state-owned zombie enterprises being for the economy? Well,
it's been hard. I mean, clearly they do prop up a lot of their enterprises through the state. Recently it's been announced that they're going to write the Chinese Communist Party into the Articles of Association, even for state-owned enterprises on the New York Stock Exchange. So clearly they will do whatever they can to prop up these enterprises. The difficulty will be not so much domestically, the difficulty will be if it works into the international trade sphere, where we've basically got very large foreign investment, very large capital injections for enterprises that are basically arms of the state. So that's something to be concerned of with international investment.
So how do you see this playing out in the longer term?
Well, probably they'll have to reform from within. I can't see them totally giving up the party links, but I think as they learn about intellectual property and international investment internationally, they'll have to adapt those enterprises so that they work better for the Chinese economy.
What's your perspective on China's economic vision in global terms at a time when the US is turning inward?
Well, they're certainly taking advantage of it, because we're used to the US playing a strong world leadership role, and perhaps a lot less erratic one than they currently play. So China will play that well. You've already seen with the South China Sea them being more aggressive in some of the global institutions. Even in terms of trade, China's probably more open now than the Trump administration. And I think they'll use the One Belt, One Road policy to basically expand so that there's stronger links to the Middle East and Europe and Central Asia. So I think we're going to see very expansionist China in terms of world influence. They don't like to invade countries, but they do like to have very strong global influence, and they're getting it.
Looking briefly at Europe, at the recent G20 summit, Angela Merkel said the region must take its fate into its own hands and stop glossing over clear differences. How do you see this ultimately affecting European-US relations?
Well, it's Merkel trying to have Germany run Europe yet again. They've got the European Central Bank and they've got one currency. So probably the biggest trouble with Europe has been too much German influence, not too little. And I think with Brexit on the cards and more isolationist stance in Washington, it probably does mean more challenges for Europe, and more German control is probably not going to solve Europe's problems. At the end of the day, you can't have a German factory worker who's 77 working in the snow in Dusseldorf paying for a Greek public servant's pension who's 51 in the sun in Athens. Ultimately, the European project has to reform itself.
And finally, to the domestic situation. With wages growth at record lows, is this symptomatic of lower unionisation in the workforce, labour cost-cutting by employers, a combination of both, or something else entirely?
I think it's been a difficult thing in the labour market in Australia that the last 30 years we've opened up our economy and we've had 26 years of economic growth, but we haven't allowed the pace of wages to keep in line with the growth in profits. In the 70s, it was the other way around. We had a real wage overhang. Now we have a real wage underhang. And I actually think the unionised areas have done quite well. Union workers tend to get paid better wages, better productivity. So I think some of those sectors have actually done quite well. The ones that are non-unionised, people have clearly fallen behind the pace. And it's amazing the Reserve Bank Governor now talking about Australia needs a wage rise, because the Reserve Bank itself was very much in favour of labour market deregulation, which has meant weaker bargaining power for workers. So I think the pendulum's gone too far the other way, and Australia probably needs a more fairer labour market where there's more job security and a better chance for wage increase in line with productivity.
So, Tim, what, in your opinion, lies behind the problem of housing affordability in the large capitals such as Sydney and Melbourne, and what can be done to address this?
Well, I guess in some ways it's sort of intergenerational inequality, where negative gearing and some of the tax advantages given to baby boomers have taken heed, and they've been able to price everyone else out of the market. So I think probably something does have to be done to negative gearing in terms of reform. And I think in some ways some issues have to be done in terms of supply, particularly in Sydney and Melbourne. But ultimately, you know, Sydney housing prices are like any world city, you know, Hong Kong, San Francisco, New York, London. Those types of cities are more expensive because that's where the high incomes are earned. And it's pretty hard if you're a teacher or a firefighter in one of those cities. But ultimately, I think that's what drives housing prices in the inner city. It'd be good to see capital cities like Adelaide and Hobart doing a bit better in terms of population and economic growth, because they're quite cheap and got pretty good quality of life for most people. I think ultimately you make sure the Council of Australian Governments is pretty fair in terms of tax distribution, expenditure distribution. You can't make people live in a place. I mean, it's true that when people immigrate, they all go to Sydney and Melbourne. I don't think you can tell people to immigrate and tell them where to live, but you can, I guess, change the distribution of the pie internally so that Adelaide and Hobart are given a bit of a go. But I think some of the policies with respect to negative gearing and improving housing supply could ease a bit of pressure in Sydney and Melbourne, but ultimately that's where most people will want to go.
Many thanks for your time today, Tim.
Pleasure.